Some positive news for the airline industry. Bain Capital has bought Virgin Australia with an early deal signed. Sky News presenter Annalise Nielsen has more.
With Cyrus Capital pulling out of its bid to buy Virgin Australia, Bain Capital was in the box seat, but it was well ahead of time when the deal came through Friday morning. Administrators Deloitte were in charge. Cyrus accuses Deloitte of ignoring their communications in a public statement, saying they'd had enough. It's an unusual move in a negotiation of this size. Insiders telling Sky News the statement may be to save face, knowing Bain was the preferred option for the administrators. Unions, however, were more enthusiastic about Cyrus because of its experience in airlines, but remain optimistic that the buyout may save jobs.
This is encouraging news. There were two strong bidders in this race towards a sale agreement. And that's a real indication that this is a company that is a good company. It's a company that is a good investment prospect.
The Prime Minister was also pleased a deal had come through after months of pressure on the government to bail out the airline.
I'm pleased that a successful bidder has emerged from that process. That's what we anticipated would happen, and I look forward to Virgin going forward. It's a sector, though, as we saw with Qantas yesterday, that faces very, very significant difficulties. Virgin is now focusing, obviously, on the domestic operations, and the domestic operations have a much more positive outlook than the international operations.
Bondholders were also pitching in to inject $1 billion in cash. Administrators Deloitte say they do not expect any return to shareholders or even creditors who are owed $7 billion.